What's going on? It's Nate. We're back with another video today. This one's a little different. We're on the charts. My last video where I went over my strategy and the last play I caught, it did very well, and a lot of people enjoyed it. A lot of people talked to me about it. So I figured why not hop on here and show you guys some other successes I've got, some other trades I've taken with a little bit of a different strategy, and how I was able to capitalize on that. And yeah, so stay tuned. This one's gonna be a banger. So let's get right into it. First things first, the ticker is AMD. A little context. So this last February, so February of 2024, there was a major tech rally, big tech rally, right? Microsoft, Nvidia, all the big tech AI related companies were kind of going crazy. But just a little insight on why that matters. So stocks that are big like that, like Microsoft, Apple, they don't move much, right? So the ADR, the average daily range, is very low. So if you're buying it, if you're putting a lot of your money, because the stock is so expensive, you're going to have a big portion of your account in that position. And if it's only moving 2% a day, you hold it for 10 days and it goes up 2% a day, right? Say it maxes it out, you're still only up like 20%. So that's not like our ideal or my ideal target with what I like to trade. I like to trade stocks that are fast, right? Because I want to make money. And so my goal is to optimize my money the best I can. I want to make as much money as I can, as fast as I can. So I want stocks that move fast. And so obviously I have to risk properly. There's obviously strategy behind it, but I could put my money in Microsoft and Apple, and I could leave it in there for a year and it goes up barely anything. Or I could put it in other stocks and it'll go up 100% in a few days. So that's kind of my reasoning as to why I'm not the shares strategy doesn't really work as well with big companies, right? Because they're not going to move as much. But with these, so this is a little bit of a different strategy than the last one I caught. So this was, like I said, last February. So it was February 2024. I was trading options on this, right? So options are a little different, actually a lot different. So it's a leverage position. So you have to risk very differently. So like what you would risk on a trade. So say you're risking 1%, right? So say your account's 10,000, you're risking $100 on that trade. But that doesn't mean you're putting a $100 position, right? You could put 5 grand in the position, only risking $100 because of where your stop loss is. Well, with options, your position size is the 1% because it's very common that these will go all the way to zero. So you have to risk properly. But a lot of people have fun with these because you could turn $50 into a lot of money. And so people with small accounts, people who don't have as much, but they're still willing to lose, and they're like, you know what, if I lose $50, whatever, but I could turn this $50 into a grand. They really enjoy this. So I don't condone that. I don't condone over risking, obviously, but that's kind of why a lot of people like options, just because the potential is crazy. So this was my play. This is kind of a little context. So this is the daily chart, like I was saying in my last video. This is the daily. This is the 5 minutes, but don't pay attention to this because I don't think this is even. Yeah, I think this is like today's chart, yesterday's chart. Anyways, so just pay attention to this one on the left side. Actually, let me make this bigger. Okay, because the other one doesn't matter. So this is the daily chart, right? So you can see the stock's been trending up for a good amount of time. So from here, which was like November, like October-ish, November, December, October, until March, it was up 80%, right? So that's a really good move for a stock that's pretty slow because the ADR for this stock is only 3.84%. So the average daily range is that the stock will go up 3.84% per day if it maxes it out, right? It's an average, so it's not going to go up 3% every single day, but it's the average over the last 20 days. So the stock was up 80% in a few months, right? So that's a good move. So we want stocks that have made big moves up and they're holding the moving averages, they're surfing the moving averages. It's showing strength, it's showing upward strength. But this is where things got crazy, right? So we saw it uptrending, and there was a setup here. Like you could have bought it right here. You could have done pretty well if you bought it in here and it broke out. You could have rode it up there, and then it broke out again right here. You can see it consolidated. It went up, consolidated, pulled up against the moving averages. It didn't tighten as long as you want. You typically want more than 2 days of ranging right here, but you can see it broke out of here, and you could have made some good money on that position. But this is where I caught it. This was my position right here. So I had been watching it, right, because I saw this happening. I saw that it had been trending upward. It was up a good amount, pretty quickly, and now it was consolidating, right? It was going pretty much sideways here. You can see it wasn't doing anything, right? It was holding these moving averages pretty well. Yeah, it fell through right here, but overall, like, it was showing strength. And then here, you could see it tightened against the moving averages. You can see it had a really thin day. You can see the volume, the volume was dying out down here on the volume graph, which is what you want. You want the volume to be dying because the volume always dies out before a breakout. So you want it to be tightening. You want the candles to be getting smaller. You want it to be holding the moving averages, and you want the volume to be decreasing. And then once it breaks out of these ranges, right? So on this day right here, I bought it at open 1 minute. Once it took out the 1 minute highs. So yeah, I wait for the 1 minute, opening range. So the opening 1 minute candle, and then once the second 1 minute candle takes that one out and shows it's making new highs, that's when I buy it. And then my stop loss is at the low of the first candle, if that makes sense. I know I kind of went over that quickly, but so that's the strategy for that. That's my entry point, and that's why I'm able to get pretty good size because my stop loss is really tight. So even if it stops out, like I don't lose much. So I'm able to get a good amount of size in these positions. But I bought it, and I believe on this day, and keep in mind this was last year. So I'm just showing you guys because I haven't taken an options trade in a long time, but I know a lot of people like this strategy. So I'm showing old trades, obviously, because I don't have any new ones to show you. So I don't remember exact percentages, but I know it was ridiculous. So I believe, so I have the screenshots. I'm going to put them up on the screen, but I need to look. Okay, sorry about that. I got a phone call, but I'm back. So like I was saying, I don't remember exact numbers. This was a year ago, but I bought the contract, and I'm going to put the screenshots up here of what I paid, just so you guys don't think I'm just making stuff up. So I bought it at 0.61, right? So, and these are leveraged. So when you buy it at 0.61, that means you're paying $61 because you're buying times 100, which I don't really know how to explain. The options chain, let me tell you a little something about trading. You don't have to know why everything works. You just need to know how it works, okay? So don't waste your time and like, well, if it's 0.61 and it's 100 times 100, what does that really mean? It doesn't matter, okay? Trade the charts. Use it to your advantage. Know what you're doing. Stop focusing about all the little nitty-gritty details. That's how you get all stuck. So I paid 0.61. So $61 was my entry price when I bought it on this day right here on opening highs, 1 minute highs. And I sold the final position. I sold it for $695, so about $700. So I turned $61 into $700, and I sold it on. I bought it on the 29th, and I sold it on the 1st. So I sold it the next day. So let me give you a little lesson in here. So I bought it here, and I sold it on the 1st, right? Because it was February 29th. Oh, so leap year. Sorry, I was so confused why there was 29 days in February. And so I sold it the next day, right? So I sold it on this candle because I only had one contract, and so I was supposed to trim because it was up so much, but I couldn't trim because I only had one, right? You can't trim part of a contract. So I sold it at $695, right? But this is when the stock was at about $200. It hit $226. Do you know how much I was up? I was watching the contracts like after I sold it, how much they were. They were over $2,000. So I would have been turning $61 into $2,000 in 5 days or 6 days. But I got scared, I panicked, and I sold because I was like trying to secure the money because I was like, oh, I just turned $60 into $700. Like I don't care how high it goes, I secured my money. Because at the time, I was just getting profitable. I was just getting to the point where I was making money. So I didn't know what it felt like to have winning trades. And so I sold it early, and I was like, oh, I just turned $60 into $700, and then I saw it go up to $2,000. So learn from me, please. I know you're going to have to experience it for yourself, but don't sell early. Follow the rules. There's a reason the rules are the way they are. This strategy has been back-tested for years and years and years, and all the best traders use it. So there's a reason it has the rules it has. So please, for the love of God, do not sell early. You'll miss out on so much money. This strategy works, right? The win rate's low, but the winners are huge. So if you don't let the winners win, you're not going to be profitable, right? If you're selling all your winning positions early, it's going to be hard to make money. And if you're making money, you're not going to make that much. Because, if you're able to hold it if you're able to turn $60 into $2,000, you can make a lot of money really fast. But if you're selling it for 600 and then you have some losing trades, you can wash that out pretty quick. Because yeah, if I turn 60 into 2,000, that's like what, 3,000%. So yeah, learn from me. Don't sell early. Like, if you're getting in my group, if you're interested in my group, I'm gonna tell you when I sell. Please don't disregard that. Please don't sell because you feel like you need to sell. You're not always gonna sell the top. You're not gonna always sell at the very top. It's not gonna happen. That's not the strategy. But there's a reason we have the rules we have. And so if you're breaking them, like, you're not gonna be as profitable. It's a fact. You're not gonna outperform the strategy unless you have set rules that you've proven are more effective. So, which is impressive if you already are outsmarting the strategy. But yeah, so that's when I use options. When the ADR is low, when the stock doesn't move much, I'll use options. Which calculating the options is pretty difficult on buying your strike price, on buying what day you're gonna buy. There's a lot of factors that go into it, so I'm not even gonna get into that right now. If you want more info on that, you can join my group and I can help you. But it's too much to dig into on here. But yeah, there's calculations you have to do to figure out the strike price, because once the stock price goes in the money is the term, that's when you start making stupid money. So because I bought it when the stock was only at 180-ish dollars, and I bought a contract saying, hey, this is going to hit $200 by March 8th, right? $200 by March 8th. Well, at this point, right, it's at 177, and it's a very slow stock. So people are like, bro, you're stupid. It's not hitting $200, so that's why they're selling it for $60. Well, guess what? When it hits $220 and you said it's going to hit $200, you're really deep in the money. Like, that's the term. You're really deep in the money, because if the stock's at 220 and you're at 200, like, you're all the way, like, it's already past you and it's already higher than that. So your contracts are a premium because of, the stock's not going to be falling below that, most likely. Like, it's not going to go from 220 to 200 in a day, most likely. Although it was pretty dang close right here. It kind of went parabolic almost. So it did go parabolic, but it wasn't a setup. So anyways, yeah, so that's when it works. And you could see, like, this stock, this was just a great market. I mean, like, there was just a million setups. You could pretty much buy anything. Another setup I had that did me pretty well was Hood. I got over 1,000% on this one. I'll put that screenshot up here as well. So yeah, March 2024. I don't remember what day I bought it. I want to say I bought it. I just when did I buy it? It must have been right here. I believe I bought it in this range. So what is this? What day is this? February 23rd. Yeah, so we saw it gapped up. Okay, so it had earnings right here and it gapped up, right? And that's a great place. So when a stock is gapping up on earnings and then it's consolidating, I'm always like, that's the top of my list. I'm like, okay, if this is holding the new level, if it's holding these new highs, it's ready to go higher. It's just trying to build up, a little bit of momentum. It's building a little base. It's kind of how you have to think of it. So it was building a range here. You can see it tightening up. You can see it building, getting tight on the moving averages. And then it broke out of here, and it went from, I believe I bought on this day. And like I said, this was a year ago, but I'm going to put all the contract screenshots up here so you guys know I'm not capping. But yeah, I bought it down here somewhere, about $14. And it went up to like 17, which that's a pretty big move because the stock was only $14. So it went up like 30% in a few days, which is huge because yeah, that was another one I caught. There were some crypto ones that did pretty well that time. This time of year, the market was crazy. I caught this move right here, Mara. So, it was strong, and then it kind of built a base, but it fell, but then it held this line. I'm pretty sure I bought this breakout right here. I'm pretty sure I got this. I got like 500% roughly, or 400%. So that market was crazy. There was just a lot of options plays because at the time things were just ripping, and so I was doing contracts. But see, the ADR on this one and on Hood are both pretty high. So we could, like, now I would do shares. Shares are so much better. I prefer shares, but contracts are more enticing for new traders because, if you have income coming in and you're like, okay, I'm willing to risk $50 because if I lose $50, I can make $50. That's what people like it, because it's like, you lose and it's like, oh, whatever, but their potential to win is huge. But like, once you get a bigger account, like now where my account's at right now, I'm not going to be over risking and being like, oh, well, I'm just going to put 5% of my account in here because I'd get wrecked. So I have to be careful. I don't get excited about options plays because I make more money on shares every time because you double your money on shares. You're doing pretty good. Let's see, which one was I going to show? I don't know if it was INDO or Okay, let me show you a different one. I think it was Root. Root did really well. Okay, yeah, this is a prime example. So this is crazy. I personally didn't catch this one, but because at the time, story time, I was only buying shares. I mean, contracts. I wasn't buying any plays that were share plays, and this one was shares because it was an earnings play, right? It gapped up on earnings. I think the return on this was over 1,000% return. Like, I mean, it was bought at $10, and it trended. See how it held these moving averages all the way till here. So it got all the way up to $80, and we were buying it at $10. All the people in my group. So you put 25% of your account in there, risking 1%, and it goes up 800% on shares. Like, do you know how much money you're making? So that's why it's so important to not sell early. Because if you got excited and you're like, oh, this is going crazy, I'm gonna sell it on this day. Look at how much money you would have missed out on. Like, that's stupid money. So that's kind of the importance. So kind of the moral of this, honestly, the moral of this message is when the market's strong, do not sell early. And like right now, the market's not strong by any means. Let me get to today. This is at that time. I mean, the market's absolute crap right now. As you can see, it's just been going down. I mean, it fell. What is this? 10%, 10% in a few weeks. Like, that's pretty crazy. It's a pretty drastic drop. But at that time, right? So you can compare it, and so this is why it's so important to understand the market conditions, because the market conditions at this time, this was the SPY at that time, right? Look how it's just beautifully trending upward. It's holding these moving averages, and it's just making new highs, and it's just pushing, pushing, pushing. This was where I made a lot of my crazy plays. This is where I was catching the 1,000%ers, because you can just see the market's just going up. And so this is when the strategy works best, right? So you're going to have, right now we're in this period, right? So some things are working. I'm still getting some winning trades, but not as many. But once we enter this market right here, that's when it gets ridiculous. That's when you literally start printing money. So yeah, I hope you enjoyed this video. I'm not going to yap any longer, but that's kind of a little glimpse of the option strategy and the importance of not selling early. You have to let your winners win. If you want to be a profitable trader, you have to let your winners win. It's so when you're losing, the mentality there, people are always like, oh, it'll go back up. But when they're winning, they're like, oh my gosh, it's going to drop, because everyone just has their mind completely offset. So you have to have the mindset, I don't care if I lose because I have my stop loss and I'm risking properly. So if I lose, whatever, I don't care. I'm only going to lose 0.25% or 0.5% or 1% of my account. And then if I win, I'm going to trim once I'm up 5 times my risk. So I just covered my position, and then I'm going to move my stop to break even. Now I don't care. I made money, and now I'm not risking anything, right? And so whatever happens, happens. Now I just let it ride. And that's the mentality you have to get to. You can't be watching it all day, because the more you watch it, the more emotionally attached you get to it, and the more you try to think your emotions are going to affect it, but it just makes it worse, because you don't make money till you sell it. So, you can watch it all day long, but it's not going to do anything. So, yeah, I hope you enjoyed. If you guys want more stock-related videos, let me know. I'm more than happy to make them. They're fun to make. But yeah, so I hope, the market turns around right now, and I can have some updated videos where I could show you guys my current trades and kind of update you on that. Right now I have QBTS. This is an example of what happens when the market's weak. Sorry, my computer can't really handle this, my trading platform too well. So this is an example of what happens when the market's weak. Okay, you can see the stock made a really big move up. It's up 500 something percent in this range over here, which was in 2 months, right? 500% in 2 months, that's ridiculous. And then you can see it was making higher lows and lower highs, which is absolutely beautiful. So this is like a dream setup, and I bought it on this day when it broke out on earnings. And you can see it made a good move up right here. I was up, I think, 60% up here, but now it's kind of fallen back and it's just sitting on the moving average. So I might get stopped out. I took profits up here and I'm at break even. So like right now, if it stops me out, I still made money. But this is just an example of what happens when the market's not as strong, because the setup was perfect. Like, there's nothing wrong with this. It's a quantum stock, so it's technology, very hot sector. but it just still doesn't have much follow through because the market's not strong. And so that's why you have to be very careful with your risk during these times. I mean, you could just not trade at all right now. I'm still trading because I like to stay involved in the market. So I just risk 0.25% or less. So if I'm losing, it doesn't matter. And then sometimes you still hit winners. Like there's been some pretty crazy winners that are hit during bear markets just because a lot of times the small cap stocks don't really care about the market, what the market's doing. So yeah, so I hope you enjoyed the video. I'll be back again tomorrow with another video. And yeah, so that's my option strategy. And if you have any questions, DM me on anything, message me, comment, whatever. And then if you're interested in my one-on-one program, if you want to get in my group where I'm giving you my alerts, I'm doing live trading every day. I'm telling you everything, single trade I'm taking. I'm telling you when I'm selling. I'm literally holding your hand the whole way, and doing one-on-one calls with you. So I'll teach you everything and show you the way. It doesn't get any easier than that. So if you're interested in that, DM me, and I can kind of give you more details on it, and then we can see if it's a good fit for you. Because I'm serious about this. I'm not gonna take people. I'm not gonna waste both of our time. So if I don't think you're a good fit, I'm not gonna take your money. So yeah, if you're interested in that, DM me on Instagram and we can talk. And I'll be back tomorrow with another video. So subscribe, like, and I'll see you tomorrow.